Yeah, there was some prompt and I ended up. I'm learning astrology. So I ended up opening that. Anyways, okay. So I would add this parallel line in this region called extension. So we would like this move to hit this blue and eventually. So actually we now this is more extended now, unfortunately, because of the report. So what is positive in this that this drop didn't continue. If it didn't reset this bounce, if you look at this bounce started from here, ended here, and it retraced, and there was attempt to make new high, but then because of the news, it went down fine, but it didn't go all the way in. So this is positive. From here on, what we would like to see is we would like to see it going down. No, of course not. This is for bears. We would like it to see. We would like to see it going up in this green path. So the bears are very excited at this moment, naturally, because they think that this is going to break. And I would say that this is about 60K, almost 61K. I mean, if this consolidates in this region, then I can say that, okay, there is some risk on the downside. Again, but that is also we have to see that how it behaves, because even if it goes down, there is some room down the line. The red line is my level, and below which I would say, okay, now it is in trouble. At this level, it's more like a warning level zone where we have to watch out, because it might end up doing something which we don't want to see. But at this level, assuming that it's going to break down is a just assumption. Okay, so what else? What else in this consolidation? So this consolidation is like over 8 weeks. It's so boring. And BTC is still holding the value, but if you look at also beaten up badly. They lost a lot of values. So that's how it is. We'll look into each of these coins and go through it. There is one exception, and you know which one we will highlight. Okay, so at this moment, as long as it stays above this zone, it's good. We don't want it to consolidate in this region. Let's go at a higher time frame and see. Yeah. So this candle was ugly, really ugly. However, it stayed. It stayed. Like this one, right? And this one also very ugly. Look at that. But then there is another one. This one also very bad one. But then quick upside move. Now a little bit of fundamental. I think on 15th we have CPI report for the US, and that is going to be super critical. I believe so. The 15th May report for the month of April, and then in June for the month of May. These 2 months data are going to be crucial, and they are going to be the driver, in my opinion, because month over month inflation has gone up slightly, but still below 4, but slightly up. And Fed has noticed that, but they are not going to jump and decide not to cut or raise even. So that is not in scope. So this is what I clarified in last meeting. So that's out of question. Now the question is what will happen on 15th? and the next one is going to be the driver. So let's say come 15, if inflation is contained or as expected inflation rate, then this is going to follow the green one. And if it is not, then it will look for the downside for sure. When I say sure, means it's behaving exactly as per the market sentiment. The macroeconomic factors are driving at this moment, especially inflation and wage related data. Consumer and because the consumer sentiments was high, um, there was confidence in market, but because of yesterday's report, we saw this kind of behavior. Now the same happened with stock market as well. The stock market was more resilient. What I observed in stock market that tech stock went down more than other sectors. So that is a clear sign. So I'm judging based on the behavior in the stock market, because when you see only the tech stock going down compared to other stocks, that means it is about interest rates, because these are growth companies. The tech stocks are growth companies, means they not need a lot of capital, and they need capital and they get capital from debt. Very simple. And when the debt means interest rate goes up, the debt gets expensive. When the debt gets expensive, that their growth is impacted or affected negatively. So that's how it works. So when you see this kind of behavior in stock market at sectors level and certain stocks level, then you recognize what is the real reason. You narrow down. If you cannot pinpoint, you can actually narrow down, and that tells me, and of course the behavior from BTC, immediately we can figure out fundamental point of view that it is directly related to spending. Now there's another twist on fundamental side, that what Paul said is on two scenario. I think he's going to cut the rate. One, definitely if the inflation rate goes down, then he'll do it. And secondly, if the sentiment goes down, means the chances of recession, if he sees chances of recession, because then he would basically cut rate and try to boost the market. That's what he'll do. So I think we'll have to see. But the challenging part is the first option is the best option, where the inflation rate goes down and he cuts the rate. The second option is not good, even if he cuts the rate, because if he cuts the rate, then inflation could go up. So the market may go up, but then the inflation also could go up in that case. So in that scenario, how much he can balance with the reduced rate is something to be seen, because his job is to contain the inflation and also to make sure there's a stable job market. So I think it's going to be very much difficult for Powell if the report shows higher inflation rate, in my opinion. So that's my perspective on fundamental analysis. I mean, that's my perspective on macroeconomics. What else? Let's look at weekly as usual. We'll switch to different chart. Now, this candle on a weekly basis uh, is showing weakness for sure. This is not a strong coin. But the good thing is, if you look at it, this was also horrible. But at the last 1 day or so, it recovered and turned into green candle, weekly green. But otherwise, it was horrible until, if you look at 4 days, look at that. This was horrible for 2 days. If you look at this one, horrible. But then this changed everything before the weekend. So something like this would be lovely. Today is Saturday, but very little time. So if it can stays, even if it stays here, and let's say it come next week, if it goes up. But as I said, I think the market is clearly indicating that it doesn't want to lose this level, and it at the same time it doesn't want to go up. That's my interpretation. Today's 11th, 15th is Wednesday. So I think it market won't assume, unless there is a leak report or news or data, then we might see early movement on either side. We don't know, depends on the data. The chart would indicate, if the chart, if the price action is significant in any direction, then we would know that somebody got to know, the data. um I think in the last one, it it actually behaved before the announcement or before the report. That's what I remember. It is possible that someone somehow, get to know. So if that happens, I think we'll come to know from the chart. Anyway, so yeah, the weekly, if I hide, but then we can say that this was really a good one. This is really good one. So unless this is broken, there is absolutely no need to assume that this is going to make new low. So if I have to summarize, I would say the recent low for BTC, I think has to be monitored. Yeah, this becomes the support, in short, the important one. I think I have another flavor where I would like to draw one more line. So this didn't happen, so I have to remove it for now. This I think I shared trend line. So this trend line is important in my opinion. This trend line is important. You may add this one locally. Very simple to make, draw on this one. So we might see some kind of consolidation here and break above. Okay, I'll remove this for now. Today I had, so this is okay. There is one more pattern that I posted, which is this one. Very important one, maybe with a different color. Yeah. So these are few lines. Let's understand them. So I think I remove this one. This is for projections, but I'll remove it for now. So if you connect these two tops, we get this, and that makes sense in a larger scheme. Then this was the first drop. It tried to break above, failed, came down, and hit this support and bounce. So when it retraced, it gave me this point, and when it bounced, it gave me this point. So that so I could draw a line like this up to this and extend. So when it went up and went down, this becomes the point of failure, technically speaking. This is not a point of failure. This was not a point of failure. This was the point of failure. So we can say the last bull run ended here with confidence. With confidence. Of course, when you look at this one, this was not that deep. I mean, of course, it was half, but it is not like super low. 50% is no joke, of course, and when we found from there, but still. But I think the most boring part was this, because the all-time high was here in month of April, and in until November there was no new high. So for it to come here, I think it took a year. So this consolidation, so to speak, down, up, and down, another try, and this one took 1 year, and that was the most boring part. And then another year it took to come return back to this level. So when you look at this April 2021 and this breakout in March 2023, almost 2 years for it. Here, this was not confirmation. This was confirmation. This was indication that the bear run is over. And this particular move was the confirmation. So we can say that it took 1 year to complete this consolidation. I mean, super boring one. And then this one was the confirmed downtrend. And it took another year. So total 2 years. Because retrospectively, we count from here until this one, right? But in reality, we should count only from here, which is May to March, which is 10 months. That's why I was saying that this was not long from that regard, because the confirmation was here and the confirmation was here. Other was like consolidation. This is consolidation on the upside. This was consolidation on the downside. When you look at this, actually speaking, the bottom was here. And this was because of FTX. This is more like digression, deviation. Otherwise, this was the bottom, which one this move. So if you look at it, this was the confirmation and this was the bottom. So in entire bear trend, there's no one can say that this is over here, this is the end of the bull run, because it could have gone up from here. It could have made this W shape, down, up, down, and then up like this. It could have done that like this very well. And this is a this would have been a really good pattern, and then there could have been breakout. But we know it why it didn't happen, because again, inflation numbers and rate hike. So point I'm trying to make here is sometimes the consolidation is so boring. The bear trend is only for 8 months, 10 months max. That's it. And in fact, effectively only this much, which was hardly a couple of months. This is consolidation, right? So that's the recent history. And this consolidation is happening on top of it. So when it went down, it hit. So when I extend this technically, which was the breakdown point, this was the breakdown point. When I extend this further, I get this small congestion area and then the recent low. And then when I draw this line, it gives me, so what we are looking at, this is a hotspot. In fact, the whole entire zone is a hotspot. You would agree. The whole entire region is a hotspot for that reason. So I posted an opportunity channel, but I didn't quite explain. So here I'm explaining, because it requires a lot of explanation, which was not so easy in text form. So only on this kind of video conversation I could explain with proper drawings. Right. So that's how. So this, and of course this extension gave the resistance, and this extension gave the support. So likewise, this green line, which became the point of failure, to me, I would consider this zone roughly, so which is around 56K. Or we can say 54K to 56K region, roughly speaking, becomes super critical, right? And if that is broken, then this orange line will come in play. And what if this is broken and then it's in trouble? Then it's in trouble. So as far as the uptrend is concerned, the uptrend is not over. That's the bottom line. Okay, that's the bottom line. And this is my explanation. When it comes down to this one, I have more accurate number. But at the high level, I think 54, 56K range that you can remember. And after that 40, but I think we should not talk about this. Let's see what happens, because it could go up, as I said. And I think that technically it is following technical and fundamental. If you observe fundamental, not the crypto fundamental, that's useless, as I said. Whether the ETF is listed in US, whether ETF is listed in Hong Kong, it doesn't matter. People make hike of it, inflows and all that. That is BS. Only one fundamental matters at this moment. That this is what I've been saying. Inflation. Nothing else matters. Inflation is driving everything. Of course, second was the war. That is now not at a high point. So only there were two fundamental factors. In fact, there were three. Craig Wright, and but the Craig Wright was is not a threat at this moment. So that's why that is out of the question for now until something happens. Right? If miraculously Satoshi comes, and I'm not saying Craig, but Satoshi, then that risk is always there. So and as I said, why it is a risk? Because BTC is not being built based on Satoshi's design. That's why I'm saying it's a risk. If BTC is doing as per Satoshi's design, then that's not a risk. Satoshi would come and enjoy. But BTC is not doing it. So that's why I'm saying risk. Otherwise, you would be wondering why Satoshi would mine. And the reason he will mine or she will mine, we don't know who, or they will mine, because BTC is off track. Anyway, so that risk is hypothetical risk at this moment. A war related risk has reduced. So only risk that is always there, it is related to inflation. And technically speaking, we will have to monitor the support and resistance, and that supports are giving us the confidence that if the price is above support, we are fine, and so on. So that way, both fundamental and technicals are helping us understanding the price action. So the whole objective is to understand the price action, because once we understand the price action, we understand the risk. It is like, I'll give you simple analogy. Let's say there are animals. We understand the nature of different animal. For example, if you are going into safari, you know what distance is required if you are in front of lion, or you know what kind of protection is required in front of lion. Compared to that, like deer, you can go closer. In fact, you can touch if it allows, and so on. So both the animals, four-legged animals, and some animals look even similar, but their nature is very different. So similarly, so risk assessment is based on our understanding of that animal. That's my point. And the same thing with human beings. All the human beings look similar, but when we recognize the threat, we have risk management in place and we are more cautious. So when you look at the charts are not going to label that they are at risk, but then analysis will tell you that the chart is indicating risk. And those indicators are always with respect to support when it comes to risk. And when it is about resistance, and then it's about opportunities. Of course, the supports are also opportunities, because when you see bounce of the support, that's opportunity. And when you see um, rejection at resistance, I would not say risk, I would say missed opportunity. Means entering at resistance when the price is retracing is a missed opportunity, but not the last. So let's not assume. So that means it has already run, hit the resistance, now retracing. So it doesn't make sense to enter. That's what it means. So, and similarly, when it hits the support and when it bounces, that's opportunity, right? Because then one cannot assume that it is going to break down. But of course, that support becomes the point of failure if it returns back. and breaks down. So I explain the planning. It is not about specific coin. I explain the way the planning happens. Planning is done, and this is very simple. So strategy wise, I'm trying to simplify using my TA. So the method is simple, but the mind is not. So those who do not have TA explanation, they have complexity or on both the sides, from the mind side and also from price action side. So at least we are simplifying the price action. So many things are happening, but I'm offering clarity here, at least attempting to offer clarity using simple approach, like simple trend line and different patterns and all. And we look at low time frame, understand what is happening on hourly basis, then 1 day, and then 1 week, and when the month end, we look at month end as well, and so on. So you get perspective all everything related to BTC, and BTC is the driver, as you know. Then we switch to important reference data like DXY. So let's look at that now. So DXY, the good news from last week is DXY retraced. Before that, it's shown a sign of weakness and it is retracing. However, there was an attempt of recovery. So when you look at these different drawings, so this is the path. The dashed path is the troubled path for us, right? We don't want it to follow. We don't want this pink and red to be realized. Okay, and so this Turkish line that we see, it should not go above, break above and close and try to break this level. That would be bad, right? So it is right now holding up. So once it starts going down and hit this level, means it breaks below 103, 102, then that's 103, then that's a big deal. That means that's a really positive news. It will again try to recover, and then this is the point of this is where I think we'll get the maximum boost. So this is definitely will give a boost, and then some kind of slow pace. So if I had to say, if it goes down from here like this, then BTC could go for 100K, let's say. And this is when it goes up from here, BTC could correct. And then if it goes down from here, then we could see higher on the BTC side. If I had to relate, this is likely to be the price action. Beyond, we don't know. For now, I think it all depends. So from here, if it goes up because and everything related to inflation, then BTC goes down, right? And if it, so I think I'm trying to make it simpler with respect to this relationship. So this is also near breakdown, but not broken, as you could see, right? This was the low. Then an attempt where it cleared all these hurdles. Remember, when it was going down, this was the first attempt. Second, retested. Another attempt, no new high, went down. This was more like an anomaly where it made new low, but then quickly recovered, like BTC recently, what we saw. And then made high, which was higher than all this. This was dangerous call. This was dangerous, but then it came down. This down move, if you look at it, this is retracement. We can say this is a retest of this zone. And it came down but didn't break below, or it didn't make new low at all. In fact, it recovered. It is recovering, not recovered, but recovering. And it is somewhere here. So what we can say, conclude is, um, this was the bottom. This was the attempt, very good attempt, because it broke all this and it retraced, but not deep enough. And now it is retrying. So if this goes up again and breaks this, that means it will follow this, then BTC is done. Simple. Because this is reflective of currency market. And the dollar is going to be, if the dollar is going to be expensive, it is not going to be, I mean, this growth speculative asset is not going to like it. Right. So this is simple explanation. So this low must be taken out. And this low, especially this become a channel. And that's why 102, below 102 is where we can confirm that this was consolidation. Means if I zoom out, this is a leg down. This is consolidation, whole entire consolidation, remember. And then breakdown will break this and it will go down in a big way. In fact, it could go down like this, expanding pattern. All right. Then we can say this whole entire move that it had in 2022, right? I'm not saying it will go down all the way here, but even if it goes down up to this will give whole entire year of bull run, because this could be like this, December 2024.